So yeah, welcome everyone and thanks for joining us today. So Tom and I will give you an overview of what's currently happening in the clean technology and environmental finance space, and we'll just show you some of the great opportunities as well for companies in this particular area here. So as you might all be aware, at the end of 2015, there was a very important agreement, the Paris Climate Accord, and that was when countries adopted the first ever universal and legally binding global climate deal. So that had huge implications going forward. It was the first ever global action plan on climate change and to limit warming to below 2 degrees Celsius. The agreement is now being ratified internationally and is due to come into force in 2020. And there are a number of key important elements, especially around mitigation of climate change, so reducing greenhouse gas emissions. The Paris Accord also has provisions in place to support adaptation, so society adjusting to the negative physical impacts of climate change. And there's also a big support package here for developing countries, which means that developed countries have committed to put a funding package in place here, a global climate fund to provide support for developing countries, both for clean tech uptake, but also to assist with the mitigation of climate change. So today we'll look into a number of sort of aspects related to the Paris Accord. There's certainly a big sort of scientific...
Is your clicker not working?
No, it's not working properly, so I think this thing is not connected.
You keep talking.
Okay. We'll suss out the technology while I take you through the agenda for today. So the Paris Accord, the policy around carbon reductions is based on a huge body of scientific evidence, and I'll show you just on the next slides that it's not just climate change that we are concerned about at the moment. There are actually 9 environmental sort of planetary boundary issues where there's concern around the growing amount of environmental change. All of that creates certainly threats for companies in terms of impacts on their businesses, their assets, their operations, also onto their human capital. But on the other hand, there are also lots of opportunities here in that space, especially around the adoption of clean technology. And we'll take you through some of our research findings. So Tom, later on in the last section for today, will present to you some of the research findings coming out of our research around the clean tech uptake, and certainly we'll also look into the business opportunities case. So as I mentioned, I'll first show you some of the scientific evidence here behind global environmental change and also behind the recent policy developments. From this definition here, the US Global Change Research Act of 1990, you can see that for a very long time we knew that there is a problem here with global environmental change. So already in the 1990s, the US had this firmly outlined here as part of their Research Act. Global change, as you can see here, is defined as changes in the global environment, which includes changes in climate, in land productivity, in our ocean chemistry, water resources, in the atmosphere, and certainly also to all sorts of ecological systems. The concern here is not just that this affects the environment per se, but the real concern here is that these types of changes may alter the capacity of Earth to sustain life. So that is definitely, I think, a very strong warning sign here and a call for action for all of us, since we are all affected by these types of environmental changes. So why haven't we acted more strongly in the past? I think we've now reached a point where global environmental change and the impacts are really, really visible. There is a lot of debate around, especially the recent weather extremes and how that's been driven by climate change. So at the moment, we can definitely see that there's urgency to act. And there's also new scientific evidence coming out that's really showing us that we had very sort of adverse developments when it comes to human impacts on the global environment. So this framework here, it's called the Planetary Boundaries Framework. It's been developed by Johan Rockström. He's a professor in Sweden, and he's got a very large research team. It's been published in one of the best journals, Nature and Science, these types of models here. And this research team has looked into what are the key driving processes behind environmental stability, and they have concluded there are 9 very, very sort of important underlying processes, and they have developed this framework and called it the 9 planetary boundaries. So these are upper limits or thresholds that as humans we should ideally not breach or exceed in order to have a stable environment. So you can see here from this particular chart here that unfortunately we have already breached several of these particular boundaries here. So you can see that we have already breached safe levels when it comes to here the biochemical flows, phosphorus, nitrogen. So what does that mean? That's fertilizer. We've emitted way too much fertilizer into our environment. That's part of a growing agricultural sector to feed a growing population. You can also see here that we've reached very critical limit when it comes to land system change. So us clearing native lands, native forests. We have definitely breached here the boundaries when it comes to biosphere integrity. That means ultimately species extinction. So we have definitely contributed there quite a fair bit to species extinction, and you can also here sort of see from our urban environment that we really don't have a very rich sort of natural habitat around us anymore. And we are reaching very critical limits here when it comes to climate change. Now this has actually prompted international action, right? Because we haven't really breached the threshold yet. There is still some hope here that we can reverse the trend. And actually our past evidence has shown that yes, international action has been very successful. The ozone hole, which was detected a few decades ago, we've actually managed to make progress on this due to international action. So there have been international treaties in place, and it looks like we are slowly starting to reverse that particular problem. It's not solved yet, it's not fixed yet, but we've phased out the ozone depleting substances, so consequently we've reversed. So that's probably the only success story here. But when it comes to issues such as novel entities, so that's us emitting waste or other plastic substances into the environment which are not naturally occurring, we don't even know the extent of the problem yet. So you can see the question mark here, which means we don't really have good, reliable data available on this particular issue at the moment, simply because we have just emitted so much, right? When you think about microplastic beads and all these types of materials, plastic pollution, other type of environmental pollution, there's probably even a huge and undetected problem here, which we still need to solve. So a lot of what we are currently focusing on here is this climate change issue, because there's still an opportunity here to reverse the trend. And this is actually bringing us to one of the key issues in the scientific debates at the minute. How far can we go? How much as a society can we emit in terms of carbon emissions into the atmosphere before we see real adverse consequences happening? So how far can we actually go with the warming trend? How much is there left in terms of a carbon budget? And this has prompted a huge debate among scientists and policymakers, because it does have implications for how much fossil fuel we can ultimately still get out of the ground and burn and emit into the atmosphere before we see those adverse consequences happening. So why are we concerned about these upper thresholds, these upper limits and the planetary boundaries? Because we do have a lot of evidence available that there are thresholds and tipping points in natural systems. And I'll show you what this looks like. So we have very good evidence that systems such as coral reef systems, lakes, or even grass and bushlands, if there is a lot of human pressure onto these systems and a lot of overuse and overexploitations, these systems actually rapidly change into a less desirable state for us humans. So you can see some of this happening with the Great Barrier Reef, for example, right? You can also see examples happening of a clear water system just flipping into a system which is dominated by algae dominance. So all of this sort of evidence shows us that there's a real concern here around thresholds and tipping points in natural systems. Now, this type of scientific evidence so far sort of focuses on individual ecosystems, but our big concern is that ultimately we could disrupt the stability of this entire planet here through our human interference with the natural systems. So that obviously brings us here to the question, what can we do? What are the threats and what are the opportunities? So our research has specifically focused here on understanding definitely the threats that all of this creates for businesses. So this here is just a summary of some of our research findings. So I just only highlight a few of those. If you are interested in the underlying publication, I'm very happy to share that with you as well. So you can see on top of this slide here to the left side the boundaries that we have already breached. Climate change, the loss of biosphere integrity, changes to our biogeochemical flows due to over-fertilization of the environment, and definitely also land use change. That has direct consequences for business. So climate change, this has been a huge debate amongst policymakers. We are seeing international action now, which means there are reduction, there are real limits in policy action in terms of carbon reduction. We also see that there are definitely questions around the early retirement of emission-intensive plants. Currently also going on here in Australia, the AGL case, right? So all of that has direct implications here for companies, right? But on the other hand, this has also prompted companies to look into new solutions around clean technology, around actually a redistribution of investment, right? So you can also see that superannuation companies, for example, and large funds companies are now looking into new ways to invest here to not have the climate change risk represented in their portfolios. And we see lots of other examples here where companies have actually started to be concerned around issues here, for example, around the loss of biosphere integrity. This has got direct consequences, in particular in reducing many of the valuable natural inputs that we are having. A loss in our sort of biosphere, in the richness of our biosphere, and also in terms of the amount of species that we've got available, has implications, for example, for the pharmaceutical sector. Draws a lot of inputs from the rich biodiversity ultimately, right? So every plant, every plant species has potential to bring us new medications, for example, and new insights here as well. So having a loss here has definitely direct consequences, direct impacts on companies as well. The insurance sector is another sector that has definitely picked up here on concerns around global environmental change. This is a figure sourced from Munich Re, the large reinsurance company based in Munich, and they have actually set up a geo-risk research unit, so a unit that is directly looking into the implications of global environmental change. And they have started to monitor the impacts of climate change, in particular when it comes to changes in temperature, changes in droughts, and they've just sort of mapped what that actually means for the occurrence of extreme events. And you can see there is a clear rising trend here, which has obviously led to quite a fair bit of concern in the insurance sector in terms of the implications following on from a sort of more frequent occurrence of extreme events. So now there is a case for action certainly here as well, and I'm handing over to Tom to take you through what that means in terms of action on global environmental change.
Thank you, Martina. Thank you, Anne, for inviting us. Just going to take you through the case for action. There's an emotive case, and some of you may have remembered this headline page on the Time magazine showing what looks to be a polar bear on a little ice sheet. Motive case doesn't really work with us. We're hard-nosed business people. We're not greenies, tree huggers. That polar bear is the most dangerous animal on Earth, right? So if you were at a zoo and fell into a polar bear cage, you'd be dead. If you were at a zoo and fell into a tiger's cage or a lion's cage or a grizzly bear, you'd have a pretty good chance of surviving. That thing is not worried about surviving, it's paddling down here to eat you, right? So I'm not worried about that polar bear at all. The moral case, that man with the funny hat in the middle, is the leader of one of the big churches, and he's written an encyclical setting out the moral case. He's done a very good job of it. He's obviously read all of Rockstrom's science and talked about all the planetary boundaries. What he concludes in very poetic language is that, you know, really the people are going to bear the brunt of this unless there's cooperation across all of the developed countries are the poorest of the poor. So they're the ones they're going to have to move, right? So the people in Africa are going to have to move north. People in Australia are going to be affected by climate change just the same as Africa is, but because we're an affluent country, we'll be able to come up with solutions. Right? Lack of water is no problem because we're surrounded by ocean, right? And the question of converting salt water into fresh water is just a question of cost, right? We've got the means of doing it. So the moral case is something, yeah, that it might prick your conscience. However, the real cases are around the legal case and the business case, right? So they're the sort of pressing ones. So the legal case for action is, well, we've got these known risks. We've got all this damn science. We've got the planetary boundary framework of Rockstrom. And we've got this huge grassroots movement, you know, these people getting out demonstrating about divestment and shoving it in our face, right? So it's going to be very difficult to argue ex post if you're a government official or a CEO that you were not aware of the risks and the science, right? And finally, firms and governments are already losing the legal case. The big one, of course, is the Netherlands. So the country of Netherlands decided that they would reduce emissions by 18%. That's quite a lot. But the science said 25 to 40. So 900 Netherlands citizens sued the government and actually won in court. And the Netherlands government said, well, you know, we're only a little country, doesn't make much difference, you know. But the court said, well, no, everyone's got to do the 25 to 40, and the minimum you should do is 25. So the court said, well, you've got to cut emissions by 25. This, you know, you guys know a lot about this. This is the law of tort. So the action was brought on the basis of your duty breach damage, right? And the duty is held to the citizens and the future citizens. Think around the world, all the countries that have this this common law remedy of tort. Right? There's an awful lot of countries. So imagine imagine what's happening in all the countries around the world right now, and I'll show you one at the end where there's a very clever and industrious law student in New Zealand is doing right around their commitments. So then there's obviously a whole lot of non-profits out there trying to do something about it. So they essentially recruit students, you know, or children, right, and file cases. So they won a case there in Oregon. They've also put forward another case in Washington State with 8 young people, and they've won a case there. Very interesting one. There's a farmer in Peru who's suing a big German energy company, RWEAG. And there's a study in climatic change by a really well-known scientist, Richard Heady, which is able to show, you know, the major companies and how much they have contributed to emissions. So RWEAG had contributed to 0.5%. So the farmer in Peru is suing this company in Germany. So what do you think, out of all the companies listed in this paper in climatic change, they've chosen the German one? Well, I think other countries would just laugh that out of court, right? Because, you know, the connection between the farmer in Peru and the energy company in Germany is pretty tenuous, but the German legal system is a very literal one, right? So they'll actually read the act, take it seriously, and see whether it applies, and it might. Yeah? And then finally, here's the clever law student in New Zealand who's suing the New Zealand government for not doing enough on the climate change, sort of mimicking the Netherlands legal action. Okay, the business case is, well, one of us has written a best-selling and critically acclaimed textbook on this subject. That's it there. So it's a shameless plug. Well, you know, we think that businesses, they actually have a duty, right? They exist to create value, right? And they have to do things that create value. They're not charities, right? So this whole global environment change has introduced changes that really alter the foundations of value creation, right? You saw some of the threats, we're going to go through some of the opportunities. So now I'm going to hand over, I'll come back with the opportunities.
Okay, well, we're definitely also seeing a lot of action at the moment is from a shareholder perspective and certainly also from a stakeholder perspective. So ultimately, I think a lot of, in particular, the shareholders have become concerned around climate risks inherent in portfolios and investment portfolios. So one of the projects, and you can see it's been around now for quite a fair few years, is the Carbon Disclosure Project, where large institutional investors came together to actually ask companies to disclose climate risks, so carbon emissions, climate change impacts. This particular project has picked up on the science around global environmental change as well and is now collecting more data around water impacts, for example, water resources and other types of environmental changes and how they impact companies. So at the moment, this is all still self-reporting. Companies can voluntarily report here for this project, but it's certainly interesting to see that there's a real concern here on behalf of the investor side, certainly to try and find out what the climate change risk is. The Norwegian pension fund has actually taken quite a drastic decision to divest and to do a large-scale divestment of their holdings in fossil fuel or energy-intensive companies. So that might be partially due to the environmental concerns, but I think also partially due to just concerns around how well these sort of investments actually will perform in the future with the upcoming clean tech revolution. You might have seen some of this in the press, the divestment movement. These have been university students. It started out in the United States, and those students thought, oh, there's really something we need to do about climate change. And they looked at their universities and said, wow, okay, our universities actually do have large investments in fossil fuel companies. It's not very uncommon for the universities, especially in the United States, to have very large endowments, sometimes of a few $billion. So that money obviously needs to be invested somewhere. And the student thought, okay, we really need to start with our own institution first and lobby for divestment here of fossil fuel intensive investments. So this gained actually quite a fair bit of traction internationally as well and extended beyond the university sector. So we now see that there is a lot of lobbying going on, also some lawsuits, as Tom pointed out earlier, where concerned citizens, where concerned students are trying to get institutions to divest. Now, we can certainly have a debate how much impact that really has in terms of stock market movement, probably not a lot, because there's always an investor happy to take up another good investment opportunity, and the companies are still definitely competitive in the stock market. But it's certainly leading to policy signals and also just to stakeholder signals that there is a willingness here to accept an upcoming change that is happening here as well. The oil and gas sector, certainly the resource sector per se, has started to become concerned here around this issue of stranded assets. There have been a number of publications suggesting that, okay, now with all the policy implications in place and also with efforts to try and reduce temperature change to below 2 degrees Celsius, that means that we might not be able to extract all the fossil fuel resources that are still in the ground. So now we do have some of our own calculations and valuations which Tom will present to you in the next section, but it has led to concerns that some assets might simply become stranded. So large-scale investments in oil, in energy infrastructure may ultimately not be rent-paying assets going forward and might have to be prematurely written down. So that has become a real concern here. Just to give you one example of potentially stranded assets, this here is the shipping queue outside Hay Point Coal Terminal near Macquarie. So you can just see here the large scale of investment in coal infrastructure, right? These ships are queuing there. One of them is probably filled up every 3 to 4 hours and is sent back to Japan, to China, to some of the large coal importing countries overseas. Now, ultimately, with a clean tech revolution being imminent, you can just definitely see the concerns here around assets being stranded. what are we going to do with this type of infrastructure going forward with potentially lower demands of coal? There's not really much else that we can sort of put into these containers, container vessels. So that has led to some concerns here around how should this type of investment being valued. And you can see that some companies have started to write down. It's so far nicely hidden in the annual reports, but we've done a fair bit of research around this as well. And there are definitely write-downs in that we can see that companies have already undertaken. But on the other side, there are lots of business opportunities here, right? Every time we see a change happening, businesses and savvy investors are looking for a new opportunity. Whether or not that might necessarily be the increase in fridge sales here due to warmer temperatures, that's certainly the question here. But you can see how sometimes companies even jump on the sort of negative environmental changes, right? We saw a lot of concern around the Arctic ice melting and receding, and the shipping industry was already eyeing off new opportunities here as new shipping lanes were opening up, right? So we should probably be a bit more concerned here around the environmental change, but you can see how there was already excitement about the economic opportunities. So we've definitely got lots of savvy investors out there looking also to maximize their profits from the type of global environmental change. So as promised, Tom is making a comeback for the last section for today, where he will just present some of our findings here and some of our outcomes from our research.
Thanks, Martina. So just quickly taking you through some of the research that we've done. So the divestment movement, we think, can't be the solution, right? Essentially what you're doing is taking out of the picture concerned investors, but they're going to be replaced by hard-nosed, rational investors that don't give a shit about the environment, right? Just dollars and cents. So really, if you want to make a difference, you should stay in the company and encourage action. So what we decided was needed was a confluence of government, grassroots, and business cooperating together. Valuing opportunities in this sort of environment where we're talking about a transition to clean technology, there's a lot of opportunities. You can't do that with regular discounted cash flow, simply because a lot of these investments are going to prove not to be successful. Right at the moment, there's a huge war. You hear about Tesla, but Tesla could be forgotten in the next 20, 30 years, right? They're making a huge investment on battery technology. Toyota, on the other hand, is banking the whole firm, the whole history of Toyota, on hydrogen fuel cells. Right? Difference is hydrogen fuel cells, you just pull up to a Bowser, and you fill up your car in a minute with hydrogen gas, right? And you've got the hydrogen. And so as the hydrogen is released, it combines with oxygen, creates water, right? H2O, and in the process electricity is created. So it's an electric car, but it's got a hydrogen fuel cell. BMW is also doing that. BMW's been working on the hydrogen fuel cell since 1985. Right? So if I was a betting man, and I am, I'd be backing BMW and Toyota and not Tesla. So what they're doing is they're investing. They're doing massive investments. One of them's got to be wrong. Right? But what happens then? They abandon and go on to the next thing. Right? So if they're going to be right, then they go on. But in the stages, you can abandon. So instead of the whole tree and all the branches, because you can abandon, because you can cut your losses, you only end up with the upper tree. This is the nature of opportunities. So the chance of getting here, starting off, having a low chance of technical success in R&D, a low chance of getting approval, and a low chance of getting commercialization success, this can still generate enormous value. So the probability of getting from here to here might only be 5%, but it can add billions. For example, I've valued what BMW can do if it continued invested in hydrogen cars with low probability of R&D success, approval, and commercialization. They could actually double their value, right? Go from a $65 billion company to a $125 billion company. And that's just with the rights to exploit this for 7 years, the patent period. So looking at the clean tech opportunities, we looked across all of the patent activity in the world. The fastest growing patent activity is around clean technology. They're second only in number to pharmaceuticals, and we all know there's a bit of a fudge factor in pharmaceuticals, because as your 7-year patent runs out, you do a little twig to your proprietary medicine and you get another 7-year patent. So you can almost say that those numbers are nearly doubled. Assuming that only 1% of these patents are taken further for R&D, approval and commercialisation, so only 1% of the total, we estimate that this would increase global wealth by $10 trillion, somewhere between $10 trillion and $15 trillion. And you see the headline figure from Bloomberg and other agencies saying around $19 trillion. That's a lot of money, right? So this is why we argue that this is going to be the next technological breakthrough, right? The opportunities here are enormous, right? So that's a lot of money. That's got to drive wealth and GDP for years to come, much like in Australia, the fossil fuel boom drove wealth and opportunities. So we've also done research around, of course, all of the primary data comes from accounting. So what's the role of accounting in supporting adaptation? And that's a paper by our professor here. The more executives know about the science around environmental change, the more they are engaged, and you're getting lots and lots of executives, businesses being engaged. The impairment, you saw some of that before. You saw the 9 planetary boundaries and how that might impair. One of the big things is relocation, right? So companies are already being relocated. Fishing companies in New Zealand, canneries, etc., having to be relocated from the south up north because of the warming waters. Whole countries having to be relocated. Everyone talks about the Pacific Islands, but it's real, right? So they're actually buying land on the mainland, right? So they can move the whole community. Look, I'm from Queensland. I know you guys in Sydney are going to be fine if the temperature increases 2 degrees, right? Because it's normally 5 or 10 degrees hotter up there, and we're just fine. Yeah. But what I'm worried about is the volatility around that, right? So, up in Queensland, we have a 1 in 50-year supercell storm. Well, they happen every couple of years now, right? And those supercell storms are amazing, right? So, in the business school, it blew out all of the windows. These big windows, big glass windows, blew out all the windows, and the glass embedded across the other side of the so on the 4th and 3rd floor across the other side of the room. So if anyone was actually in there working, they would have been hurt. So luckily, the only person in there working was the person that hadn't been there for 2 years and just turned up that day and got some injuries and got another 2 years off. You have to change the way. You couldn't have the windows like that. You have to have the little sort of prison windows. You couldn't have your car parked out in the street because the hail just destroys them. You couldn't be walking not under cover. Right? You have to have the tunnels and air bridges and whatever, right? So it's completely changed. If these things happen more frequently. So the 2-degree increase in temperature, I think, is nothing. That's the mean. It's the volatility, right? It's the variance that we should be worried about. So we're working on this with Bob Lowry, the BICS guy, the climate fear gauge guy. So looting, profit maximisation. So there's a great paper by Akerlof, the Nobel Prize winner, talking about bankruptcy for profit. Looting. This is what the tunnel companies do. I think they all go bankrupt when they go to commercialisation. So this is bankruptcy for profit, right? It's called looting. It's legal. And maybe that's what the fossil fuel companies are doing, right? They're not being charged for the damage that their product does, so in a sense they're getting this indirect subsidy from the government, and it's an enormous amount. The United Nations has got no idea that their meetings could be informationally relevant, right? we track the probability of informed trading. It increases, spikes 50% the day before the meetings start. Yeah? And there's a lot of money that could potentially be made if you look at the price changes. So if a hedge fund manager happens to go to those climate meetings and hosts the influential delegates, the person from the United States is going to be influential, the hedge fund manager takes them, has a welcome reception, just happens to have a 60-year-old bottle of single malt scotch or two, and the delegate stays back and has a drink, not paid for the information, but of course on that second bottle it sort of reveals what the US will be voting, and the hedge fund manager then, because these are normally held in Europe, brings back to New York and says, let's do the trade, right? And mainly in the fossil fuel companies, a lot of money could be made. And then we actually do see the spike of 50% increase in probable informed trading. Chinese delegate, of course, you'd have to drink the Mao Tao with them and you'd probably die. The stranded assets we've looked at. So the governor of the Bank of England has warned people about investing in fossil fuel companies. We think he's completely out of the lunch. We think he's completely, what's he doing? Scaring people, right? So the market is not stupid. We can do the numbers. If you were the CEO of a fossil fuel company, you have a fiduciary duty to exploit the proven reserves, right? It turns out the proven reserves of fossil fuel companies, oil and gas, are only 15% of the remaining carbon budget to stay within 2%. So they can easily do that. And that's what they're doing, and that's what they should be doing. Market knows that. Guess what the residual value is, right, if they weren't allowed to do any more exploration after. So the residual value is like 95% of the current market value. And the stranded asset value, the bit that's stranded, is only about 5%. So the market is valuing this correctly, right? And we've used a methodology that we use very successfully in the takeover field as well, so like an RFS paper that Bob Whaley, Kate Barraclough and I had written. So just more on this big opportunity, right? The reason we think there's going to be the ninth technological breakthrough is going to be around clean tech is just simply the R&D expenditures by governments and businesses. For example, Australia has ramped up its R&D expenditure in clean technology. Even Australia, you're a basket case, from like 150 million to about 600, 800 million, right, depending on what government's in power. That's pretty much the same as the Europeans. And just this incredible number of clean tech patents. Paris Agreement means that the people holding these patents, they're not going to wait any longer. This is their best opportunity. They're starting to commercialise, right? This is going to happen. And technology, of course, as you know, they decrease over time. So here's the hit list: railway, electricity, automobile, radio, microelectronics, personal computer, biotech, the internet, right? So these are the technological breakthroughs going back to what, the 1980s, 1883. So there's only been 8 of them. The next one, we believe, based on the evidence, is clean technology. And you saw what we thought, only 1%, if only 1% of the patents in clean technology were taken further, you saw the numbers we got, right, using real option valuation, is between 10 and 15 trillion dollars in value added. So, and the big question is, what would it look like and how's it going to unfold? We all know what happened in most of those others, right? So there's this rapid expansion. Yeah? There's winners and losers. Yeah? Tesla's going to win or lose. Toyota's, on the flip side, it's a zero-sum game here. They're going to win or lose, along with BMW, who's somewhat hedged. But one of those are going to be big winners, right? And one of them is going to be a huge loser, right? So Tesla name might be unfortunate because they've lost before, so they might lose again. And I'm backing them to lose again, right? If I was a betting man, it's just the horizon of that, right? So I might know for sure they're going to lose, but that mightn't be evident until 10, 15 years, right? So my short sell is going to be dreadfully exposed at the end of a few months. We all know then there's going to be a period of stability. This is normally what happens. We saw that with the internet. And then what the economists very nicely call creative destruction. what we call a bubble in the first, and then a renewal. So if you think about the internet companies now that are very successful, would we have picked them back in 1999, right, when the internet was really booming? Right? I don't think we would have picked the ones that survived. Right? So your grandchildren are going to say, well, why didn't you get into the internet? You're going to go, well, it was very difficult at the time, very risky. Why didn't you get into thing technology? Well, I didn't know which one to do. So it'll seem obvious to them in history, just like the railways and the motor vehicles and the microelectronics and pharmaceuticals, right? The biotech seems obvious to us now, but at the time these are hard to know which ones to go for, right? So finish off. Probably not dark enough in here. This just shows sort of, I think, it's one of the favourite pictures we have. It shows the Earth at night, and it shows where manufacturing and the high energy intensity the developed world is. So the US, certainly Europe, we're not even there, can't even see. I think Africa's in there somewhere, you can't see it. You can see Japan, and you can see India and a little bit of China. So this is really where the energy consumption is, and it's a NASA picture, obviously not done on one night. It's a composite across many hours, but you can sort of at a glance see where the developed world is, where the money is, where the energy use is. So I think we're done. One more. I know there's one more, but we can do that one. But again, we're not greeny stuff, so we're not greeny. As a business, you've got to do something only because it's going to make money, right? Only if it's got to be consistent with your fiduciary duty, right? So I'm completely on board with the CEOs of fossil fuel companies continuing to pull their proven reserves out of the ground, right, and converting into cash. That's exactly what they should be doing. They're not going to do any harm. The major reserves, coal reserves, are held by nation states. They're never going to get their act together in time to pull that out. Right? So there'll be a lot of coal left in the ground. But they're also going to have coal-fired power stations, right? Through to 2100, we're not going to be getting rid of all the coal-fired power stations, right? This is going to be a gradual transition. 66% renewable worldwide by 2050 is pretty standard, that people think. And then, not 100, but getting close to 100 by 2100. This is a long time frame. Nothing's going to happen overnight. Right? There are a lot more jobs in clean technology than there are in fossil fuel. Right? So there's not necessarily going to be a loss. There's not going to be a loss of jobs at all. Right? When we were doing that investment paper, I looked at the tax, because I was saying, well, if universities, don't want to invest in the companies that are doing the fossil fuel, then they shouldn't take the share of the government money that's raised from fossil fuel companies, right? And the share of government money that was raised by the government from fossil fuel company tax was about 25–30%. So they should say, okay, we're not taking 25–30% of the grants you're trying to give us, right? Because that comes, dirty money. They should be consistent. They should say that. So I thought, oh, well, that's only the company tax. Let me look at the individual tax. And I'm looking, and I couldn't find a number. And then it come to me, right? All those enormous trucks and extraction things you see in the mines, right? A lot of them, driven robotically or whatever, automatically, right? There's hardly any people. I had stories of people being employed in mines, right? That's sort of the exception, not the rule, right? And you see the people in the yellow jackets that fly in and fly out. But there's actually not, even though we see them fly in and fly out, there's actually not a lot of them, right? So clean technology, because it is, you're getting out doing the windmill, solar panels, and constructing the wave and the geothermal and whatever the hell they're doing, right? The space mirrors. It's very labour intensive. Okay, we're ready to answer questions. Would you like to come up for our professor? Steve.
Thank you, that was really interesting. So your real options trade and also your short on Telstra.
Yeah.
Do you think government should get out of subsidising? Because that is tilt your path.
The government's out. The government's not going to make any difference now. It doesn't matter what Trump does or what Turnbull does. There's $19 trillion on the table. What do you think business is going to do with that, right? So this money is sitting on the table. Forget about the threats and everything. Forget about the effect that the business is having on the economy. That's all out the window now. It's what you're worried about is the effect that the environment's going to have on the business, but that's the threat, but the opportunity there enormous, right? So, yeah, BMW invests $10 billion in hydrogen cars over the next 5 years, with only a 40% chance of R&D success, and then only 40% chance of commercialization success. They would double their value, literally double their value. So it's just worth the investment, right? And it doesn't matter if it was $20 billion, it's still nearly double.
There wasn't a conclusion slide, so I'm just trying to, in my head, put together what is the
There's threats and opportunities. Yeah.
But if I was to make myself, but I'd like you to confirm and elaborate on it. It seems that because of the strength of this development in the patents and what have you, and there's such a large number of patents and you only need a few of them to be successful, it basically seems that this problem will be solved almost by itself, even though you put a lot of effort behind the creation of those patents. I also see that any influence in policy in itself is not really going to have much effect.
What we could do, right? What we could do is people in Sydney. We know this is going to happen. We could make it a friendly place for technology companies, and we're trying to do that, right? We've got the Macquarie Park Technology Centre. We've got the one in town, and we really can't back winners though, right? Because a lot of these companies are going to not work, right? Even Tesla's not going to work, or Toyota's not going to work, right? So we have to give them a break somewhere, and when they're sufficient scale, so we could sort of offer. One thing is clean tech companies. We could offer them a break on payroll tax once they get to about 25 employees or something, at a stage where they might likely be successful. We'd like to have the wealth coming to us rather than to Frankfurt or London or Paris or California, where they're very friendly towards technology. So that's one of the things we could do. It's going to happen, but how can we sort of tilt the wealth our way? So that's, the government is not going to affect things anymore. The subsidies don't matter anymore, right? The economics are that the clean technology is coming down. The economics are still that we're going to be running fossil fuel, coal-fired power stations for a long while to come. By 2050, which is seems to me to be a long while before, you'll still have half the energy provided by coal-fired power stations.
But so the doom and gloom that was being painted at the beginning, it seems it's like, it's okay, we can all go home, we'll be fine.
Well, it's there's still the risk of it's going to happen naturally, but there's still the risk that it's going to be above the 2 degrees and the volatility might be bad, right? So there's still going to be it's probably not going to be enough to stop the there's got to be environmental refugees, right? And that's essentially the people of Africa, the Pacific Island nations. Some of these things are irreversible. The sea levels really are going to rise, and the Pacific nations aren't going to be able to hang on. So we need the actuaries, for example, should be sort of planning for 50 years out. Where are the environmental refugees likely to go? What infrastructure do we need? What development we need? What safety nets do we need?
The issue is also that the impacts are going to be distributed very unequally, right? So we are looking at this from the perspective of being in a country where we do have all this funding available to invest in these opportunities, right? But when we look into Africa, for example, the reality is that many people there are just barely making their minimum income. They're really struggling to survive, and there's obviously no investment there that's going to happen, right? That's where we see this sort of effort to bring some funding on behalf of the United Nations, for example, into these communities to allow for adaptation. So I think ultimately we might actually see that it's really hitting the poorest of the poor, which is a very unfortunate sort of outcome, right? The best estimates suggest that even with clean tech breakthrough in full swing, we will be above the 2 degrees, right? So this is a bit of an arbitrary target that is not based really on the best scientific advice. It was originally established in the 1980s, 1990s, in the early days of climate science. People kind of thought, oh yeah, 2 degrees kind of looks like we might still be able to cope with this. It's not scientifically verified that 2 degrees will be good or bad for us, right? So that's why, for example, the Pacific Island nations are pushing for a maximum of 1.5 degrees because they are getting increasingly concerned just about sea level rise and all the other negative impacts, you know, the hurricane cyclone type impacts. So there's definitely a huge push internationally to make this happen sooner and faster. But yeah, I think the message should be that there's not going to be any impact and clean tech is just magically fixing all of our problems.
Sure.
I think the good opportunities are here for companies and business to get on board and get on board fast, but it will have very severe negative impacts.
So the market is going to help the problem, but it's going to help it unevenly, right? So it's going to be, we're going to be okay, Europe's going to be okay, US is going to be okay, but that guy with the funny hat talking about the poorest of the poor, they're not going to be okay. So then that's why we need some coordinated action. And look, you know, as Martina said, that really worked with the ozone thing, right? And this coordinate, I mean, it's unprecedented, isn't it, to get all the countries in the world except for Syria, the United States, and the other country to agree. That's incredible. That's every damn country in the world, right? How often does that happen, right? Yeah, they're always, the United Nations is a particularly spectacularly and ineffective body, right? They get unanimity from every single person.
Another good example is lead infection.
Yeah, that was amazing. Yeah, that was amazing. And the paint, yeah.
And the concerns were, intellectual problems with children.
Yeah, yeah.
I'm just curious about the numbers in the stranded assets. It was interesting, if I interpreted it correctly,
Yep.
you said that the market had already
Factored it in. So the market has got the residual value if there's, you know, they aren't able to continue, right? That somehow or other they're stopped, right? There's effective action on climate change. The market's already got the price is relatively at that residual value, so 95% of the market value.
So if you look at the book value of someone like ExxonMobil,
Yeah.
there would be a limit in there that sort of implied, an environmental limit in there.
So we know what their reserves are. We can look at their proven reserves, and we think they're comfortably going to be able to extract all of those and convert them into cash.
And we're not in an environmental catastrophe scenario.
Definitely not. They've only got, combined, the public companies only hold 15% of the remaining carbon budget.
Is that right?
Yeah, and they can do a little bit of cheeky exploration and extraction too. Right? So they're fine, and their residual value, when all is done and dusted, is pretty close to their current market value.
Given the high risk payoffs of a lot of the investments, do you think that the funding channels in the financial markets are effective enough to make sure that there's sufficient funds
Well,
to go
I mean,
into these projects?
Toyota and BMW are not going to have a trouble. Tesla seems to have generated enough interest, but you and I starting up, you know, something might have a little bit more. It might be nice to have some access to fund, but you know, maybe we should have to do it the same as everyone else and has done any other technological breakthrough and make the case ourselves, right, do the pitch ourselves.
We're a small country. Where are the patents in terms of global?
So the US, and seem to be doing a lot, have got a lot of invention going on. Europe, China, we've even got some, but China's got a lot of patent activity.
Look, can I perhaps call a halt there? We're pretty strict about getting away on time. If Tom and Martina have got a few minutes extra, I'm sure they'll answer your question.
Yeah, we'll hang around.
Firstly, thank you, and we've all been left with an enormous amount of reading. I can see the list there of US